Welcome back to Web3verse. 2025 has been nothing short of a roller coaster for the crypto world. With price swings, regulatory updates, and new technological breakthroughs, it's no wonder everyone is asking the same question. What could 2026 have in store for crypto? Fortunately, a recent institutional report from Coinbase Institutional sheds some light on the key trends that could shape the crypto landscape in the coming year. Today, we're going to break down the most important takeaways so you'll know exactly where to focus your attention. Trends that could potentially make or break your portfolio. By the end of this video, you'll have a clear picture of what to watch in 2026 and how these developments could impact your crypto journey. Now, a quick disclaimer: I am not a financial advisor. Nothing in this video should be taken as investment advice. This is purely for educational purposes. If you enjoy this type of content, show your support by smashing that like button. It really helps the channel. So let's dive in. Key themes for 2026. The report starts with some broad themes, not just within crypto but across the broader tech and financial landscape. One major theme is AI and its economic impact. The integration of artificial intelligence is still very new and not yet fully reflected in official economic data. Coinbase even compares the current AI boom to the tech euphoria of the late 1990s. AI isn't just about automation. It's becoming a productivity engine that could ripple through many sectors, including crypto. Next up is crypto regulation. In the US, 2025 saw the Genius Act, which set clear rules for stablecoin issuers, and the Clarity Act, which aims to clarify market structure regulations in 2026. Meanwhile, Europe is advancing with the MiCA bill, and regions like the Middle East, Asia, Latin America, and Africa are developing their own frameworks. The report emphasizes that clearer regulations aren't a limitation, they're an opportunity. They allow crypto projects to innovate with advanced derivatives, broader payment solutions, and new ways to reward token holders, such as enhanced staking and fee distributions. Another trend gaining traction is institutional adoption through spot ETFs and digital asset treasury companies, DATs. The report notes that spot ETFs are expected to gain momentum in 2026 thanks to new SEC guidelines that shorten the approval process from 270 days to just 75 days. DATs, on the other hand, are evolving. Instead of just holding assets, the next generation, what the report calls DAT 2.0, will actively participate in staking, DeFi, and other yield-generating strategies. Closely related is the theme the report calls tokenomics 2.0. With clearer regulations, crypto projects can offer token holders innovative ways to receive value, from revenue sharing to token buybacks. Regulation here acts as a catalyst, opening the door to the next stage of crypto's economic evolution. Privacy is another key focus. We're seeing a surge in privacy-focused transactions, driven by both institutional and individual demand. Institutions want to shield their strategies from competitors, while individual investors are increasingly concerned about surveillance and data tracking. The report also highlights the intersection of crypto and AI. New protocols like Coinbase X42 could allow AI agents to handle microtransactions, creating entirely new forms of commerce. And all of this is happening on application-specific blockchains with institutional-grade infrastructure, including private chains for asset tokenization and securities trading. Interoperability in real-world assets. As crypto ecosystems grow, fragmentation becomes a challenge. The report suggests that the future lies in interoperable networks, a network of networks. Those that enable atomic multi-chain settlements, unified liquidity pools, and synchronized real-world assets, RWAs, are likely to emerge as leaders. Tokenized equities or tokenized stocks are expected to see rapid adoption, offering on-chain trading 24/7 with near-instant settlements. Prediction markets are also gaining attention, partly due to regulatory changes like the One Big Beautiful Bull Act, which altered tax treatment on gambling-like activities, creating a demand for more tax-efficient forecasting platforms. Of course, stablecoins remain a top focus, described as crypto's killer app for mainstream adoption. With clearer regulations, traditional finance players are increasingly recognizing their value, and the sector is projected to continue growing, potentially reaching over $1 trillion in the coming years. Bitcoin and Ethereum. The report also dives into major cryptocurrencies. Bitcoin in 2025 saw some awkward price action. While its volatility remains lower than tech stocks, Bitcoin is now less influenced by miners and more by institutional adoption. Asset managers, hedge funds, and even banks now play a larger role in market dynamics, often holding Bitcoin for the long term, which reduces volatility. One long-term concern is quantum computing, which could eventually compromise Bitcoin's encryption and mining model. While this is not an immediate threat, Coinbase emphasizes the need to prepare for quantum-resistant signatures in the near future. Ethereum had a roller coaster 2025 as well. ETH dropped sharply early in the year but reached new highs later, driven by institutional demand and the Pectra upgrade, which improved scalability and user experience. Looking ahead, the next major Ethereum upgrade, Glamsterdam, is set for 2026, promising further scalability improvements and reduced centralization risks. Solana and altcoins. Solana, or SO, also had a wild ride. After hitting all-time highs early in 2025, it saw a sharp decline before recovering somewhat, supported by initiatives like staking ETFs, tokenized equities, and network upgrades like Fire Dancer and Alpenlo. These upgrades aim to enhance transaction speed, efficiency, and institutional readiness, enabling high-throughput applications like gaming, payments, and DeFi. Stablecoins and tokenized assets. Stablecoins continue to grow exponentially, with transaction volumes nearly doubling in 2025. Beyond USD-pegged coins, new stablecoins tied to other assets and tokenized precious metals are emerging. Real-world asset tokenization is gaining traction as well, from tokenized treasuries and commodities to private credit. Legal clarity has been the key driver, allowing institutions to confidently launch major tokenized products. Tokenized commodities, especially gold, have seen significant growth, while tokenized credit markets are expanding because they bring transparency, liquidity, and programmability that traditional finance struggles to offer. Regulation in 2026. Finally, regulation remains a pivotal theme. 2025 saw the SEC launch Project Crypto, clarifying which digital assets qualify as securities and modernizing custody requirements. The CFTC also made strides with listed spot crypto trading and exploring tokenized assets as collateral. Globally, regulators are moving toward more clarity, creating an environment where innovation can thrive while ensuring investor protection. What this means for 2026. So, what does all this mean for crypto next year? The market may face pressure, but this provides time to build robust frameworks and prepare for the next wave of innovation. Clear regulation will allow developers to focus on long-term infrastructure, quantum resistance, and secure on-chain systems. Will DATs continue to accumulate as much crypto as possible, or pivot to competing for on-chain sovereignty? Will the 4-year Bitcoin cycle remain relevant? These are questions only time will answer. One thing is clear. While 2025 was turbulent, 2026 presents opportunities to accumulate crypto with serious upside potential, especially as projects focus on technology that truly matters. That's it for today on Web3 Verse. If you want to dive deeper into quantum computing risks or Bitcoin's upcoming challenges, check out our related videos right here. Thanks for watching, and I'll see you in the next video.